Thoma Bravo founder and managing partner Orlando Bravo. He joins me now in a Fox Business exclusive. First, Orlando, I have to ask, because I know you are based in Miami. Is everybody safe right now in your company?
Thanks for asking. As you know, I'm from Puerto Rico. We talk about that all the time. And it's so personal to me. When Hurricane Maria hit Puerto Rico, we were there as an organization, the Bravo Family Foundation, 2 days later, in all these towns that the government, neither the local government or the federal government could get to. And I worked there for about a month. And the things that I saw and the displacement and people losing their homes, people not even having access to food and water. It was just incredibly sad and personal. So we are praying for all the people in Tampa, in Largo. As a kid, I used to live there. St. Petersburg, Central Florida, where it looks like there's going to be huge problems. We're just praying for all of them, and we hope they're all safe.
And you've got a company that you invest in Tampa, correct?
We do. We have a big office from our investment team in Miami. And it looks like Miami's going to be okay. But we have this great company, ConnectWise, based in Tampa. It's one of our best companies, just so many great people. And we're making plans to help them with whatever they need.
Well, God bless you, and I hope everybody that you care about is okay. Let's get to this court ruling, this bankruptcy judge saying, okay, we can now redistribute money to the customers. You had invested $130 million. Do you think you'll ever see a penny of that again?
I don't know. And you know what we do, right? For 25 years, we've been buying market-leading software companies, these beautiful businesses with $500 million in revenues, billion in revenue, that are not working for their shareholders. That's where our alpha comes in. We buy the whole company and we look to operate it properly so that our investors can benefit from that. In the boom times of 2020, 2021, we made a tiny investment, less than 0.1% of our assets, into this crypto exchange. And it was a passive investment. Lo and behold, a year later, the management team of that exchange commits fraud, hurting customers and shareholders alike. Now, what we hear is that there may be a tiny recovery for their shareholders, closer to 10%, but we don't know yet.
Does this ruin any future investment by you into specifically crypto exchanges or companies like that?
Oh, it absolutely does. Once, our view and our philosophy of investing, because we're investing other people's capital, and mainly institutions that look for stability and consistency of returns, and we take that very seriously. And once you get burned on something like this, you just never touch it again, no matter how good it might be in the future.
And yet your private equity company focuses on software companies, and a lot of these, whether it's blockchain, which is the digital ledger for all kinds of financial transactions, or any other company, especially AI, it's very important to what you do. That's where you're hunting, correct?
We're hunting in enterprise software. Business-to-business enterprise software. Now, within that ecosystem, AI and generative AI is a lot more interesting now than blockchain. And blockchain has wonderful use cases, especially like you mentioned in financial services. But investing in companies that monetize their value through currency, through cryptocurrency, we won't do that again.
No more.
No more.
Okay. That said, let's go to the AI picture here. Last time you were here, we spoke, and you said you were looking specifically at healthcare companies that had AI built into their software or that they were growing into that. Where do those companies stand right now?
It's really amazing what's going on right now. In the business-to-business world, if you're looking for pure generative AI companies that are providing solutions to great banks and large industrial companies, you can't find any. Most of those solutions are being built by software companies that know that use case. A great example, and I'll even take you outside of healthcare, is cybersecurity. We own a company called Proofpoint. It's doing roughly $2 billion in revenue now. And if you want to secure your email from threats, you use the Proofpoint system. They're the market leader. They have developed a Gen AI product that when the email comes into your system, Proofpoint can tell you the intent of the sender of the email. Not whether it's because the company has data of trillions and trillions of emails that it receives every year and can train a large language model in that data.
When you say intent, you mean the intent of their message or some other type of intent?
Both, whether it's a genuine intent and it's safe, or even the intent of the message. Now, what's interesting in all these areas is some of these solutions are being provided by market-leading software companies already, but the customers themselves are not paying for them. You're bundling that into your overall product that you're offering.
So many of the companies that you invest in are not huge yet, and then you hope that they will grow and become large, and you can then sell them or take them back into the public world. But the Federal Reserve, today we got the minutes, a majority felt that a 50 basis point cut was appropriate. Do you hope, because it's these growing companies that tend to need to borrow capital more, do you hope that there will be bigger rate cuts down the line?
Look, it would be nice. It's like when the first 50 bips happened, it wasn't like the private equity industry was just throwing a party over it. It didn't make much of a difference. It would be nice, but we're not expecting a zero interest rate world or a free capital world anytime soon. Those days we feel are gone. So what we try to focus in is, can we increase the earnings of our companies consistently?
Would you think that there will be another 50 basis point rate cut between now and the end of the year, or does it all depend on some type of economic shock?
It's likely. You know, what we're seeing, we have now $35 billion of software revenue coming from our companies. And we see not quarterly results, not monthly results, we see daily results.
Daily.
And these companies are offering their solutions to customers around the world. It's basically the GDP, the Global 2000 as their customers. And we're seeing an environment that's relatively muted. It's relatively flat right now.
Can I just ask you from 30,000 feet, do you see the economy as stable, strong, close to a recession?
You said it exactly right, stable. And it's been stable now for about 8 quarters.
So when you hear people say, oh, this is a horrible economy, I mean, it is tough for some people out there who still are paying higher prices with inflation. But, I mean, we look at really bad economies that we have seen, 2009, when everything imploded during the financial crisis, or after the dot-com implosion. Those are bad economies where there is no job to be found.
So those are two different things. The huge income inequality that has been happening in this country is part of a systemic problem. It's a system issue. And it's really difficult to see. And over time, there can be no economic progress when you have that sort of inequality because people choose to leave the system. It's not fair for them. You choose not to play the game. So that's one issue that we're going through, which is kind of topical now that we're about to have a huge election and a very close election. Now, from the standpoint of, is it a bad economy or not for people in Wall Street, for people in business that own these big companies? No, it's not. It's just not an incredibly booming economy like it was coming out of COVID with all the free money that these enterprises were able to get access to. One CEO of one of our companies said it so well, the CEO of Anaplan, Charlie. One investor asked him, how come you're doing so well? Is the economy coming back? And he said, no, we just learned how to live in this new macro. So things are pretty stable and you just have to get adjusted to it.
Orlando Bravo, thank you so much for coming on the show.
Thanks for having me. It's
All right.
good to see you.
Good to have you here. Thank you so much.